Welcome back. You're watching us here on Chartbusters. Let's get straight to the management of Kolte-Patil. They reported a good set of third quarter numbers, but remember the company had already announced the volumes of the third quarter. In January itself, they had announced the operational update. And for real estate companies, that's more important than just the P&L itself that they report. We do have with us the Group CEO, Rahul Talele, joining in to discuss the future of the company. The quarter gone by was good. Thanks a lot, Rahul, for joining in. And that really is the question, will the fourth quarter be as good as the third one? What's the outlook on, run rate, quarterly run rate? Because if the fourth quarter does exactly the same, you'll probably be clocking in a run rate of 750 crores per quarter. Is that the way forward?
First of all, thank you for having me on your show. See, we have just concluded the highest ever pre-sales number for the group in terms of value, in terms of volume as well. And it is backed by a strong launch pipeline that we have achieved in Q3. And likewise, we are sitting on a very strong launch pipeline in next, couple of months. So having said that, we are confident of achieving a similar or in fact better numbers in the coming quarters. So backed by our strong launch pipeline. So on top of that, see, on a quarterly basis, last FY22, we grow at 45%. FY23, we are expected to grow at around 30%. Certainly, I won't be happy with a 20% growth for the next financial year. So having said that, our quarterly numbers will be as good as what we have concluded in last quarter.
All right. So Rahul, in value terms, it's around 1,500 crores as of the 9 months. If you do as well in quarter 4 as you've done in quarter 3, you'll end this year close to around 2,200 crores, right? At least.
That's correct.
And on that, you want to do a 30% growth. So by next year, you'll be close to around 2,900 crores.
So I said we won't be happy with the 20% growth. Certainly, it will be upwards of 20%.
So anything between 2,000.
We'll announce our guideline for next financial year very soon.
So at 20%, it'll be 2,600 crores, or you want to do better than that? So closer to around something between 2,700 to 2,900 crores is what you can look for in FY24, going by the numbers you're giving us.
That's correct. So let me share one more thing. See, we are currently sitting with a launch pipeline of 7,700 crores. Out of that, we have launched 2,000 crores worth inventory. So another 5,700 crores of inventory in a launch pipeline. On top of that, we have the net, the top line potential of around 22,000 crores. So barring this 7,000 crores, still we are left with 15,000 crores of, top line worth land bank. So, and on top of this, we are very aggressively looking for a business development opportunities. So if I combine all this, certainly our, the next financial numbers will be very, aggressive.
Talking about aggressive, I saw two things that you've recently done. The first one, you've made inroads in the Bengaluru market, very small right now. What's the kind of expansion that you're looking at in the next 2 to 3 years? And secondly, you've mentioned that you're targeting new business development with a top line potential of almost 7,000 crores. Can you elaborate upon both of them?
Yes. So let me answer the second question. So out of 7,000 crores, we have already announced one deal with a top line potential of 1,400 crores. That is we have acquired a asset in Pune with a top line potential of 2.5 million square feet. After acquisition, in couple of months, we could launch that project and we got the very good velocity in that project. Simultaneously, we are working on a multiple launch pipeline so the commercial discussion has already been closed. Technical and legal due diligence is going on. So in order to take the advantage, in order to squeeze the timeline between the, the legal closure and the launch. So what we are doing, we are parallelly working on the approval cycle. So like what I just mentioned about the QLA, post acquisition we launch in a couple of months. Similar you can see in our 3-4 BD closures in the next couple of quarters. So we'll be acquiring assets, we'll be announcing that to the market, and in next 2 to 3 months we'll be launching that project itself. So apart from this, see, our diversification target is in the range of 35% of top line value we are expecting to come from non-Pune projects and 65 from Pune projects. As we want to strengthen our position in Pune, we want a better visibility in Mumbai and Bangalore market. So we are in track through our business development opportunity, and I'm confident that we'll achieve this diversification in near future.
All right, in the near future, you expect 35% of your revenues to come from the non-Pune markets. But this 7,000 crore, how long will this take for you to execute? I mean, by when can you recognize the revenues of 7,000 crore through these agreements?
So in this 7,000 crores, few deals are large size deals. So wherein the project cycle can be 4 to 6 months. The few deals are small deals, mid-sized deals, wherein the entire inventory can be launched in one phase itself. So over there, the tenure would be in the range of 3 to 4 months. So depending on the project size and depending on the sales velocity, I could comment better in terms of the the revenue recognition. But apart from this, we are sitting on a very strong launch pipeline, and this on year, we'll be getting a better revenue recognition. In fact, this year we are going to achieve not only a best ever sales number, we are going to achieve a best ever collection number. We are going to achieve a best ever revenue recognition numbers through CCM methodology. And we are confident about maintaining our strong margins, and we are that is in line with our targets.
Okay, all right, Rahul, final question before we let you go. Real estate is a bit of a tricky subject. Suddenly, when you're focusing a lot on sales, that debt number suddenly starts to worry. For you, what's your current debt number, and at peak levels, what will it look like?
So as a group, we have followed this philosophy since last couple of decades. So we are, so our leverage is very low. Currently, our net debt to equity ratio is just 0.2%. So 0.2, and still there is a good amount of leverage, and we'll explore that opportunity to acquire a good potential land bank for the company. But we are very well placed in terms of the leveraging for the company in real estate.
All right. Thanks a lot for joining in and giving us all those details. Wish you good luck for the growth going forward, and hope to speak to you when you have drawn up your plans for better guidance for the next year as well. Let's take a short break. On the other side, we have with us